Talk on the chain.
Right, guys, welcome to the podcast and welcome to the channel. Michael Carter, aka Bits Be Trippin'. Nice to have you on board. Like I said, thanks for joining me today. I've been meaning to like have a proper chat with you actually. I know we've exchanged brief conversations on Twitter.
Yep.
I think in the past I wanted to reach out to like who was it? It was Whit Gibbs from Compass, I
Yeah.
think it was. Because a couple of my business connections wanted to do some mining and stuff. So and you kindly did that intro, so I appreciate that. But anyway, long story short, yeah, happy to have you on board. Do you want to do like a quick intro and tell the people about yourself and
Awesome. Yeah. Yeah. Mike Carter, been running Bits Be Trippin' now since 2013. So we're one of the very first mining channels on YouTube. So I've been mining way prior to that. And late 2010 is when I discovered Bitcoin, and then, had various rigs around the house. Essentially when you could mine with Bitcoin on a GPU is when I found it. So I used to do a lot of SETI at home and folding at home, and just on the internet looking at like Reddit one night, I saw that hey, you could do this other thing. Looked into it, started mining, got it up and running, and then it was just like got that orange pilled early. And by 2013, had a pretty good handle on how to build rigs and do things with just crypto in general. You had Litecoin coming onto the scene around then too, and Feathercoin and some of the other ones. And I was like, there needs to be a YouTube channel on this. And I looked, and there was a few, like one video, like somebody had, did it, discovered it, had one video, but nothing that was like episodic or series, that kind of like built on the experience, and then try to almost crowdsource information to people, like I'm doing it in this way. It's like not the way, but it is a way. And then, the internet will always tell you if you're wrong or if they're doing something. So it's like kind of like, hey, that's a great idea, and then once you get that positive feedback to people going back and forth, it actually starts to build a community around it. So, by mid 2013, it was, a pretty established channel. So been doing it quite a long time. Have scaled it from kind of in home to now we're doing larger projects. We have a couple larger ones ourselves. I mean, 15 megawatt farm and a 5 megawatt farm that we own and are part of. And then we do a lot of other stuff, consulting and that kind of stuff, fly all around the planet to do that for people. But yeah, got a good team. We're almost up to 9 people. And yeah, just it's been most of the content now is on X, just because of timing and just how quick it is. We don't have a lot of time to do the YouTube stuff as much, but we're working on that here in 2024 to reestablish that. So you guys just Google it and you'll find everything you ever want to know about BBT.
yeah, that's awesome. Yeah, I mean, I've personally heard of BBT, and as I said, I've known that you've been in the space for quite a while. I've not been in the space as long as you. I know that you're a bit of an
Yeah.
OG. I entered back in 2013, and
Mm-hmm.
it was just simply off of the recommendation of a friend that said, "Look, hey, look, there's this Bitcoin thing," and I was like,
Yeah.
"Okay." And then when I first sat down and listened to everything he had to say, I honestly I didn't understand it. I'll be honest. I really just thought, "Hang on, like I've got a headache after this. I'm gonna
Yeah.
have to go and do some more research." But excuse me, I went down the rabbit hole, and I haven't looked back since actually. And I
Mm-hmm.
started by mining myself, but I wasn't like when I say mining myself, I didn't have like a setup or anything like that because as I just said
Mm-hmm.
explained, I didn't have a clue about it. But back then, as I'm sure you'll recollect, there was like probably a finite number of cloud mining companies that were coming on
Mm-hmm.
online at the time, and I think I opted into like Genesis Mining, I think at one point,
Yep.
which is run by Marcus,
Mm-hmm.
and I just thought I'll just give it a go, put in like 100, $200 and see how it get on. And it was actually at that time when I started that it really started to exponentially grow at from where it was. And I'm
Yep.
thinking around it was about maybe $1,000 at that time, I want to say from memory. And so
Yeah.
by the time I'd started mining, and we hit that peak, I was thinking, hang on a minute, after like a year or so, I had like a 1,800% increase and growth in my mining profits, and I was thinking, sat there thinking, wow, this is really real. Like this
Oh
you can
yeah.
actually make money from this. Um,
Mhm.
now I ain't going to talk about what I did with the rewards because yeah, I kind of I wish I hadn't
We will.
spent them.
Yeah, we've all done that, you know, like buying hardware or, you know, I think the first time Newegg came
Oh
online
yeah.
and you could order on Newegg, it was like, oh, let's get some GPUs. I can spend it, you know, with a company, and it was so seamless, and it just you could see the excitement just in the space, you know, that there was, you know, a counterparty for goods, right? That was, you know, basing it based on your current spot and then how all that mechanics worked. And then BitPay coming on the scene, you know, to try to help all the other smaller entities to be able to convert, you know, because at the end of the day, you still got to pay your power and stuff on and your expenses and your goods stuff in, you know, whatever native currency, if it's you know, dollars or wherever you're at, you know, but it at least was a medium of exchange, and the baseline of that was being held up by people, right? It wasn't, you know, a government, it wasn't, you know, somebody printing money. It was, you know, participants that were collaborating to build up, you know, you know, the mining, and then you had node operators, and then you had other, you know, developers building things for that. And it was just like the permissionless nature of that is really what attracts. And, you know, and that's where I was, uh, you know, trying to educate and bring people to that awareness that, you know, it's the fact that you can find, even today you can find Bitcoin. You know, there are other currencies too that you can mine too, like with GPUs and stuff. The barrier entries early for folks to get in on that, that you could participate, you know, discover it one night and then the morning have coin that then you could use for a medium of exchange. I mean, just that whole concept is interesting. And then, you know, people are like, well, it's coming out of thin air. It's like, no, it's the security architecture of it. And I always tell people, you know, for your support of that security architecture, which is what it is, you're reinforcing the amount of proof of work there, which then makes it harder for other people to cause an attack on it. You're compensated, and that coin happens to be worth money. You know, more worth exchange for, you know, U.S. dollar and stuff, and that's, you know, it's now started to get to bigger enterprise because they're seeing it from like a cash business, right? Or, you know, just an inflow to where they can put capital, they can, you know, depreciate expenses. It's a real business, right? So it's, you start looking at that, and then if you look at any other business type where you're having to go get your receivables, you're putting a bill out there, an invoice, somebody may or may not pay on time. This is something that you put capital in, and it is paying you out. You know, like you don't have to go look for it, it's showing up. So when you start to kind of architect a solution around that model, it's, you know, you have a little more guarantee with regards of the coin that you're getting. Now, the price is disjoined from that, and it can go up and down. It's very volatile. So I'm not saying it's out within any risk. And it really matters on how much you're spending, you know, how much your power is, and all those other things when it comes to mining. But um, you know, there's other alternatives, and that's the other part that I, you know, talk to people too. Like maybe you're a developer and you're like, hey, you know, I don't have, I'm in an apartment, I can't really mine, but you can build on that ecosystem and then still get compensated, you know, for just a medium of exchange again type of thing. So, you know, there
Mm,
is a it's its own, like almost its own culture and mixed with its own capabilities that are all decentralized. And I think that's still highly important in this world to have that and expand on that, those freedoms. And you can see the proliferation of how much industry has been built around it now with very limited to gray regulation, right? So you know, people are capable, you know, we don't necessarily always need regulation. I get why there's regulation in certain aspects out there in the industry, because there are bad actors that are going to try to do bad things, but they do that with regular cash too, right? So there are going to be mechanisms always, you know, for the folks that are very anti KYC, KYT, AML. I mean, those things are there for very specific reasons. Um, and yes, like everything else can be exploited for, you know, both from the government and from external. So it's just, I think if people are just being as close to honest actors as they can, you know, just participating in the industry, it still moves it forward. And we've seen that kind of really over these last few years expand. And now we're in big infrastructure with ETFs and all those type of things. So yeah, it's exciting to kind of be there from the beginning,
Mhm.
essentially, and then watching it, kind of expand and have bans and have countries that pick up that slack and load, and then um, opportunities in areas. I mean, the amount of emails and correspondence we've gotten from people that have, maybe discovered the channel or been shared something before, and then looking at their particular situation and how they've, you know, changed their life in the ways that they never even thought were possible, from countries that were maybe had a hyperinflation currency,
Yeah.
but they were doing this, mining with a couple GPUs, and they're like, over the 3-year span, I was able to, get out and move to another country and have a different life for the family and stuff. It's interesting, man, all the different stories you hear through this over the years. But yeah, that keeps the drive going.
Yeah, do you know what? I literally wanted to talk about that today, actually,
Mm,
like the evolution of Bitcoin and where we were and where we are today, and not just with Bitcoin, but
mhm,
in my opinion, I'm not really personally a Bitcoin maxi.
mhm,
I'm a blockchain maxi.
mhm.
Um, my day job is a developer, so I'm a blockchain developer. I develop smart contracts. I conduct
Yep.
smart contract security reviews and audits. That's what I do, but I'm not a maxi. So from my perspective,
I'm not
like you
either.
said, yeah, that's good.
If you've watched the channel, I'm definitely the same boat of, I think any exploring, well, like the premise in general, like if you can't go and change the core code, there's always a way to fork it. And I mean, Satoshi even said that, like, if you want to try to build something else, the code is open source. Um, and I understand I understand where somebody could get into the point of view of like, this is the only thing, because of, you're looking at an asset class and a monetary instrument. I get that part from their maxi view of like, from a monetary instrument and like a single class instrument related to that. But if you look at innovation and where everything else can go predicated on this tech stack, you have, an open field of opportunity of not just, making capital and money. I mean, that's a driver for sure, but like really changing certain aspects of what the current tech stack is. And like you too. I mean, we do. By trade, I'm a solution architect, so and came from development, so I like look at the bigger picture of different aspects. And just to take for instance, I got into a conversation with a few different maxis before, and actually have had a few over the house and had good debates about stuff. And I almost had to think I'm convinced where there's a purpose for other things, right? It's like
Yeah,
it was a concessionary kind of like, okay, I get it. But I mean, my main thing was like, if you take, for instance, a very kind of complex process, but if you look at SCRM, so a secure supply chain, so supply chain risk management as an example, things that we've helped with before are a chain of custody that instead of going in, and I think this is where like IBM and a few of the other bigger companies kind of messed up, is they try to go in and say, I'm going to use this blockchain, Hyperledger as for example, and Sawtooth and those things, and I'm going to replace your process or your system. And I think I look at it differently, where if you look at the stack and what crypto and blockchain can do, it's an augmentation to like a capital system. So if you have events that are sequential in nature or even multi-party, you can have a situation where you don't change anything in the capital system, but when you do a verification and a validation step, maybe it's a person or a process, you can take a snapshot of that event and think of it like it's not even a decision tree, it's just a sequential process. And I'll take, for instance, supply chain risk management, where you have an OCM, an original chip manufacturer, to an OEM, like a Dell or somebody like that. And then you
yeah,
have an end user. You have this chain of custody of when it was produced, how it was produced, what kind of chips were on it, to how it was packaged, how it was loaded, and then it goes to an end customer. Those are a lot of parties in there. There's some folks that are shipping it, and then between, port of embarkation, debarkation, that kind of stuff. Those are a whole bunch of disparate systems. Just and then you'll have like a bill of lading. You have all this structure in place to kind of know where it's at in the stack, but they're all from all these different systems. You can layer a public chain and use just key events, triggers, as it were, that they all subscribe to. So they're not changing any of their system. They're just subscribing to flipping a switch of here is this particular unique identifier that could be obfuscated that means something in both people's capital system, but nothing to the world. And then you could trigger all those events to that chain of custody as a product or something is making it through its way. And you're leveraging the view for the world or for any of the participants subscribing to that service, right? So if you think from a developer standpoint, it's abstracting the event tree publicly to where anybody that cares about that and has essentially the cipher of where that's at in the process and a trigger that it was verified and then now it's now in the next process, you could keep all the capital systems, Cognos and all the other, SAP FI and all these different systems in place, but they would just have triggers to this view. And then it would abstract all this complexity from interface agreements. And I need to let somebody in my firewall stuff to give like a peach shover on where is it at in the process to, just for procurement. And then you would have this chain of custody from a supply chain risk management that did right, wrong, or indifferent. There's a record that's created, and then if you have any appends or updates to it, it's just appending and update the original record. It could be completely wrong, but the next one, you're like, all that stuff was wrong in those fields. I've changed it, but now you at least have the chain of custody of who did it, when it happened, if it was wrong or whatever. And then you have all this exposure that you can not have to open up your capital systems to, and people that care about that value chain can subscribe to it um, through using multi-signature and key pairs that you end up creating a connection with them. So you can have a privileged version of that where if you have a key pair share with somebody, or you could have just a public version of it. And that would allow people to see things a lot easier, and then you don't have to give all this access that is a pain and security risk anyways to have people give people access to certain systems. So there's applicable use cases in that. Everything I just said you could do in Hyperledger, you could do in Tendermint, you could do in Enterprise Ethereum or Ethereum right now, just from a subscriber post kind of standpoint. Um, and the economics of that, you probably want to do on layer two, but like that is a plausible use case for the other public chains, right?
Yeah.
You could technically do that with Bitcoin, but you'd be, the UTXO set and the way it's designed isn't probably optimized the best way for that, and you'd be just really trying to get it to fit because you wanted to use Bitcoin for it. I would argue, and that's why I would go back to the maxes. I'm like that Bitcoin doesn't need to do that, and you would be it'd be unpurposely fit, right? And I look at it like from a corporate world. It's like when somebody's like saying, "We're going to do this." It's the wrong direction, but we're going to do this, right? I look at it like that kind of mindset, right? It's like technically, architecturally, all the other reasons why you probably shouldn't go build that on something like Bitcoin. You could definitely build it on Matic or some other kind of layer two, and then you look at all those benefits of bringing all those other customers that could now participate without having to get agreements and all this other stuff. But that's kind of like from an architecture and a solution side, one of my arguments is back to like the maxis and stuff is there's and it's not their, I'll step back and say it's not necessarily their fault because they're not solution architects.
Yeah.
Some of them are just financial people, right? They're not looking at it in a view um, that understand on how like core processes work in like big capital systems that hold information and make the kind of industry and from like procurement to supply chain to maybe business processes, all those things. They're not looking in that mindset of it,
No.
and nor should they. I mean, they don't care, right? They're like, I got a person for that, or a sailor will be like, I have a company that does that and works fine with Oracle. And it's like, yeah, it may work fine with Oracle, but like Oracle could still be in place, but like you want to expose a whole bunch of other people. Do you want to give them access to your Oracle database? No. So like those are the kind of conversations that I think, if they'll sit in a room with you for an hour, you could probably convince them.
Yeah, I know. I
Sorry to be
know.
long winded. I was trying to make sure you had
No, no,
had
no.
stuff
It's
there.
fine. It's good because I've I've evolved myself when it comes to
Mhm.
understanding blockchain, and yeah, you're right. Bitcoin is not, it's not for everybody. It's certainly not applicable in every area of the corporate world, and I think
Mhm.
as it stands, it's certainly a speculative investment for a lot of people. And we touched on
Mhm.
it earlier when we talked briefly about the rise of the ETF from BlackRock. So, and
Yep.
that's a big milestone in the Bitcoin industry because I remember having discussions with Maxis
Mhm.
back in like 15, 16, and we were trying to push for it. And I would say the industry's been trying to push for it for many years. So I think, in my opinion, I think it was a really big win for Bitcoin. I'm not too sure about. It's ironic, isn't it? Where how it's come about and the timing of
Mhm.
it thereof as well. Because is would the impact have been the same if we weren't about to hit a
Mhm.
halving? And that's a question because right
Mhm.
now there's hype as in any cycle. There's always hype up to a halving event, and then we normally see like a bull run afterwards. But it's interesting that this ETF has been rolled out at this time. And there's I think behind the scenes there's definitely some collusion going on, and
Oh yeah. I mean,
you know,
I think the natural order is like they're, and it's just the way it is the financial folks are going to try to maximize the returns for their investors, and they're looking at every opportunity to, um, you know, within the rule sets that they're having to play in, um, you know, do that and maximize that. So they're going to try to, if there's information warfare, like trying to like, oh, it's like, perfect example is Jamie Dimon. And I think genuinely, I think Jamie Dimon probably doesn't like Bitcoin. It's his
no.
opinion, right? But his company operates to make money for investors. So like it's there, you could have somebody that's not beholden to it, or sorry, that doesn't really like it, but the competition and the way those kind of mechanisms work within large companies is they have to compete.
Mm,
And if you have, this new asset class coming up, you're going to have not even middle management, you're going to have part of the C suite that's going to be like, hey, we have to have a strategy for this. So it's not that they have to accept it, it's that they have to have a strategy. And some of that strategy sometimes is to play ball, even if they, if it's against kind of their normal, push or volatility risk, that type of thing, they still always have a high risk trade desk, right? There is always an appetite in some level of portfolio for people to have a high risk part of their portfolio. It might be 1 to 3%, but it's there. And if you have something that's been performing as well as Bitcoin, you're gonna have some participation in there. So it may not be their focus. Um, they may not like it, but they have to participate. So and then that's why I kind of read the tea leaves when I see statements like, hey, JP Morgan Chase started putting out, buying, options on Bitcoin. Even though Jamie Dimon came out and said that they're not connected, bro. Like the head is not necessarily connected to that vine and span that's probably making that high risk piece because they have a portfolio to match, uh, from a risk and a growth standpoint. So like again, it's kind of one of those things that just take a basic understanding that they're all going to probably participate in some way. They've all been trying to participate in some way. They have components within their companies that are doing that. And the risk, and I know I've heard Catlin Long say this before, is the whole reapothecation or dilution of instruments that they can come up with that are Bitcoin backed. But the realities are is like, can they start to spread that uh that dilution to where you wouldn't see, like you would see all this money coming in to their institutions under Bitcoin backed instruments, but it's not Bitcoin 1 to 1 back to the dollars that portfolio is worth. And that's part of the risk with why we wouldn't see, $1 million Bitcoin as an example, is because they're gonna dilute it to where, and try to put this narrative that, well, it has a portion of Bitcoin in it and all this other crap. And Bitcoin is what's lifting that tranche up, right? That's the stuff that needs to be, kind of put a spotlight on, and look at like a class of that particular financial instrument to make sure they're not diluting, these things. So like if investors are looking at it, like, is it fully Bitcoin backed? Is it 1 to 1? Is the CTF fully backed on what it says it is? That really drives the price of Bitcoin because of the supply crunch, right? So, and we're producing 900 Bitcoin a day right now. The industry, because that's the inflation rate right now. Bitcoin moves to 450 after, a few months from now. That's going to have, and there, I think the last figure I saw is roughly about from the start of the ETFs, to now, it's been close to around 6,000 Bitcoin a day that's been flowing in. So at some point, that's going to tell off because all the OTC orders are going to dry up. There's just
Yeah.
not going to be any more people wanting to sell, and then the price is going to start to lift back up. So I think that, these instruments provide that path, that where Bitcoin is going to, has the opportunity to expand pretty rapidly from a price standpoint. Um, but it is, I know many developers that are working on the front ends, the back ends, the views for people to be able to see the allocations and stuff, for like we're talking like Fidelity Crypto as an example, to
Yeah.
where you'll be able in the next year to be able to go into your Fidelity, if you have a Fidelity account, and then move your 2030 package, take 5% of that and put that into a Bitcoin instrument. It could be direct purchase through the ETFs. It could be, taking GDBC, something like to that effect. But that frameworks are being deployed literally right now in real time. So we'll start to see when you can get retail in there just to click loot almost, and make changes in their portfolio, which will put a higher demand on the retail side. And if they're running out of OTC orders, it's going to come to spot, and we're going to
Yeah.
start to see a pretty big lift.
Yeah, no, I agree with that. I think it's interesting because Kathy is a massive proponent of Bitcoin, isn't she? And
Hmm.
I remember watching her, I think it was Jack Dorsey and Elon Musk, and there was the presenter, I think, 3 years
Yep.
ago at the height. Well, it was in the middle of between the first initial bull run in I would say April, May time,
Yep.
2021, and then like the October one that sort of peaked. And listening to them talk, excuse me, it was pretty evident that institutions were just making their way to Bitcoin at that point. And I think that's what that last Bitcoin bull run did. It really brought a
Mhm.
lot of the institutions into the industry. And on that note, actually, off the back of that, we saw probably arguably one of the biggest crashes we've seen. And it was probably again arguably
The
governed
alts for
by
sure. I mean, some of that
yeah.
was FTC or FTX rather, and Bittrex moving from the US, and a
Do you
lot of
remember
consolidation.
the
Mhm.
bit? Do you remember the Bitfinex? The
Yep.
was it Bitfinex back in 2014 that just went like that?
Yeah, the Cripsy, you had these several exchanges, start to falter. And then, we had all three of the major banks, Signature, and, that collapsed with this. I mean, and a lot of that is that kind of, it's almost like real life PvP, man. It's like looking at like who's the financial instruments that makes retail be able to get in here, and then you had all of the stuff that was happening with FTX, and it pulled a lot of you know interest out of Bitcoin, like it does with most bear cycles. But it was kind of, I don't want to say it was artificially pushed on
Yeah,
some of the things. When you look at some of the banks that had failed, and you start looking at like, okay, what has to happen for that to occur, and you look at regulatory stuff, you look at um just some of the behaviors that were happening in that moment in time. It was like trying to purposely push it down. So it's right after there is reasonable speculation, right, that some of that was forced and pushed to be able to drive a lower Bitcoin price to be able to pick up Bitcoin. But at the end of the day, it's still, you know, I don't think it hit to the levels they were wanting it to hit. right? It
No.
didn't pull back 95%. It pulled back 80 and some change. And, I would say the altcoin markets were hit way harder. Um,
Yeah.
some of those are still down tremendously. And as Bitcoin has risen back up, they really haven't had their, 25, 30% lifts, 40% lifts yet. I look at stuff like, from Solana to Ravencoin to, um, Ethereum Classic to some of these other like networks that had, way more market cap. Um, they just had the money hasn't came back into those, and
Which is
even with
which is
some of the
interesting, isn't it? Because that, like
Mhm,
Raven Coin, except for example, which is I believe it's one of 11 plus forks of Bitcoin actually, and
mhm,
it makes sense for something like a proof of work consensus algorithm coin sort of
mhm.
rise in tangent with Bitcoin due to its lack of centralization. But yeah, it's interesting you mentioned that because they really have not recovered. I mean, there was a lot of hype on those coins.
Yeah, I mean, Ravencoin, I discovered very early, like it came out in 2018, and I heard it first from Patrick Byrne from Overstock. He was talking at the North American Bitcoin Conference in January of 18, and um, the I think we made our first video like late January and like how to mine it and stuff. But it's a UTXO set. It's a fork of Bitcoin, but their premise was to take and add an asset system that was then had that asset system be done on chain. You had a burn with using tokens to create assets, and then it had a integrate. It's the only UTXO that I know of that has integration with IPFS, so you can like append to files
Yeah,
to your transaction set at the base layer. Um, that's relevant for anybody that wanted to do any kind of like I think the framework was designed to do like stock trading and have stock ownership attributed as a co-location, right? Again, so it's not replacing like a stock system, but it's a way to account with a key pair to a share of stock versus it on a public network, right? So then you could see the transactional count. So if somebody says you own this many shares of Apple, essentially we were just trusting that there isn't somebody in the background selling way more. I mean, there's audits and stuff, but like it's like do I really have are you just selling it because there's a buyer? Where this allows that one to one, that there's a unique identifier to each of those shares. And so like the premise was solid. It's a limited supply, is 21 billion coin versus 21 million of Bitcoin, same halving schedule, all those kind of things. So it has the right instruments. And I think of coins that are like that were fair market launch, it all comes back down to regulatory focus of like what is a commodity and what's a security, right?
yeah, exactly.
Ravencoin follows a lot that could be considered the same as Bitcoin because it's launched the same way. It was fair market launch. It would fall in that commodity class. It's not, there was no raise, there was none of that. Where like you look at Ethereum, I mean, I'm really surprised Ethereum hasn't had its day yet in court for just paying the fine essentially of Ethereum Foundation um, did a capital raise of 70 million coins, right? And sold
I
them in
remember.
tranches to do that. That's by definition a security. But it is what it is. When we started mining it, it was late September of 15. I think my first video was in the beginning of October of 15 at the launch. I mean, it was 30 cents, right? And like one GPU rig was mining 130 Ethereum, right? So it's like,
Yeah, just
you know,
crazy.
it was crazy. But like there was 140 million coins or whatever. There's now like half of that was mined, right? So and now the proof of stake is reduce that inflation rate, considerably. But like um, there was a lot. I think some of those altcoins, I think some of the money is holding back from the industry of like what's going to shake out with any kind of you know, is there going to be fines to Ethereum Foundation? Are they going to have their day in court and then it can move on, right? Are they going to pay for doing the raise, and then now they have a structure to move within. It's still kind of gray. I think proof of stake in general, and I think certain coins are all kind of in that gray space when it comes to at least the U.S. market. For some of those, that's part and parcel why I think a lot of the ETFs for Ethereum have been denied is that they're just like, hey, man, too soon. Like we still need to have this conversation, right? And I think once they have that conversation, I think from a technology stack, like you can build, you obviously can build things on Ethereum. There are things built on Ethereum. There's problems like anything else. It's not, again, it's a square peg, round hole type of thing on certain implementations that people were trying to do at layer one. And I think it comes down transactionally. It's really hard to have, a functional business model on something that has such a varying cost on gas price, right? So, it but I think it was a necessary thing that had to happen to figure out how do we enhance that stack to where you can reduce and you create more capability that can dovetail into, maybe a better solution for capital systems. So it's a catch 22. Like I think that more innovation needs to happen on top of all of those chains really trying to aspire for capability,
Yeah.
and then kind of separate that stack of like who are still trying to build and then who's just in it for the lulls and the money, right? And you kind of have the meme coins, and then you have the coins that are actually trying to do real engineering. um
That was what I was
and
going to ask you about, actually.
yeah,
So on my list of things for us to discuss today was
yep,
the meme coin culture, and
yeah.
like how, I guess it's almost like how did it create this class? I mean, you remember Shiba Inu. It
Yeah,
created a
Shiva
class
and
of like
Doge.
Doge, yeah, Doge, yeah,
Yeah, Doge. I mean, I was there at the first start of Doge, and it was hilarious, and it
which is
was
also a
memed.
mineable coin as well.
Yeah, yeah. It's co-mined with Litecoin. So if you
Litecoin,
mine
yeah.
Litecoin, you get both Litecoin and Doge, which I thought was a very brilliant move by
Mm.
Doge. I can see a future state of mini coins probably move into that model. And that's the like people are so worried about mining like Bitcoin and the thin margins that can happen during bear markets, but there is opportunities in some of these other coins that if they start to kind of combine the security model, you reduce the proliferation of multi, like all these different coins that have are stealing quote unquote the attention of miners that could mine, these different threads to where they'll start to combine up, right? So like let's say like Raven coin and like something like Ergo or something came together to where you still are mining kapow, but you're getting both
Mm.
tokens, right? So the ecosystems really kind of inheriting each other's security model. Doge kind of paved the way. They weren't the first to do a merge mining, right? I think Purecoin and Curecoin and those coins were kind of the first on the merge mining side, but like it showed that from a mining security architecture way, you could incentivize the growth of the network, because now you're getting essentially two yields, and if one of those start to lift up, I mean, it's not Litecoin that holds up those L7s, right? It's Dogecoin, right? Because the Dogecoin being at 8 cents right now even is still makes it very lucrative for anybody mining those coins, which keeps the security model growing, right? People are buying more hardware for it. And that's the whole thing. I was like, people are like, oh, you're just in it for the cash. It's like, it is a security model. And that security model pays us, and circumstantially, it's worth money. So, the more security, that's why I share videos and I create more videos to get more mining out there. They're like, you're just hurting yourself. I'm like, no, a stronger network with a strong infrastructure enhances the chances that people are going to build on top of that, because they're like, oh, well, nobody's going to double spend that network, right? There's no risk to creating a major issue there, short of if the code has any issues type of thing. But like it's uh I think those coins coming together definitely creates a new incentive for folks. So any developers of any core coins out there, put your community notes out there and see about merging. I think the mining community for sure would welcome a 2 for 1 on anything. So like and then it enhances, let's just look at the Doge and the Litecoin model, and that's it. But to go back to your original like meme coin thing, I mean, I think culturally, I think just people love to laugh, and they love to create. I mean, if you think of Doge when it came out,
Yeah.
it was a meme coin. It was brought Jackson Palmer. Yeah, I think it was Jack Palmer.
The Billy
Created it.
Jackson.
Yeah, yeah, that is
Billy Jackson, that's
that's his
it.
name. Yeah, there it is. Man, it's been a minute. So when he came created it, it was. it was for fun. And the fun part of it was doing things with it. So it was more than not just because of the coin and the name. It was that it did have some level of monetary value and you had lots of units of it, right? So people liked that concept of like I had thousands of these or millions of these coins. And then it was the collection on Reddit that was looking for things to spend it on, right? They
Mm.
bought a NASCAR team for a, they did the library for the Dogecoin Dogecoin car for a NASCAR race, right? They did it for sent the Jamaican bobsled team to the Olympics, right? It
I
was
remember that.
they paid for those things. The community was donating those coins to make these hilarious things in society happen. And I think that is um I think that in a nutshell is kind of Elon Musk in general, right? Like he is fiercely smart, but loves the fun part of life too, right? So he's just trying to think of what would be hilarious, and create these crazy things. And you know, I think that's why he gets attracted to Dogecoin is because of the meme. And I don't know. I think it's healthy for society to like that. I think it's risky, obviously, for people to YOLO everything into it, to know what it is for and what it's about. But just think of it like you know, not everything you're going to do financially is rational, and that's okay. I think that's the first part. And if you think of when you have money and you spend money, think of it like entertainment. I look at it from like it's those kind of coins are an entertainment thing. It's an entertainment value, and you spend money. Like we all spend money when we go out. And is it rational when you're thinking of a budget and oh, should I not spend that money or not? No, you're doing it because you need that relief from that release with your friends and whatever. I look at those meme coins in the same way, that if you treat them in that capacity, you may have a great time entertainment. If you go to a game and you maybe do a betting on a game or something, again, not super rational. It is gambling, it's risk. I think you're doing that with the meme coins too, right? It's not the full purpose of them to make you YOLO rich, but it is also like I can do it, have fun doing the risk side of it. That's a meme coin to me. And I think that definitely people can get caught up in the fervor of like growth and try to like put everything in because you get a high unit count. But I think Shiba and all those things will stay around. I think they have a huge, vibrant community and people love it. And that's all that really matters for the meme coin, right? It doesn't have to do what Bitcoin does. It doesn't have to be a financial class instrument. The realities are enough people love it and are going to continue to support it. And that's going to drive value for people to continue to maybe do crazy, outlandish stuff with it, like entertainment.
Yeah. Well, it's interesting because that kind of could be a little segue into what I'm
Mhm.
about to mention because I don't know about yourself, but I'd sort of park myself in so many Discord and Telegram groups and communities and including Shiba. And
Yeah.
they've started to move away a little bit from that meme culture sort of rhetoric
Mhm.
now. And um, again, anybody like watching this, like Shiba was created by an anonymous user called Ryoshi.
Mhm.
We don't know who Ryoshi is just as much as we don't know who Satoshi is. But excuse me, they
Mhm.
have started to move away from the meme coin culture side of it and shifting a little bit from what I can see towards the DeFi sector. And I mentioned like Shiba Swap, and there's a couple of other external integrations that they're looking to do. Now, I don't know how popular that is with the community. I would imagine they'll support it because, like you said, it's they're just doing. Initially, they got into it for fun, so I
Yep.
think they've built that like cohesive unit all together, and they probably will do so. But in terms of like the wider sort of adoption, we don't know just yet. And yeah, as a segue, I think what's your I'm not going to say anything because I've probably my take on things would be a little bit biased as a blockchain developer, having
Mhm.
audited and developed a few DeFi protocols and staking, lending, and all of that. But do you have what's your thoughts on DeFi? Do you have any involvement in DeFi? Have you developed anything in DeFi?
No, so I haven't developed anything in DeFi, but I've been pretty involved with understanding, how bridging works, how the transition between layer one and layer twos work. Um, from a decentralized finance, I think it's a healthy approach to the ecosystem for folks that, you know, it's hard to justify in the US when we have a like every financial instrument you can think of. We have Venmo, we have PayPal, we have all these things, very centralized, but just from a convenience and from a mass population standpoint, use very convenient, easy. In other places in the world, not so much. There's huge opportunity, I think, outside of the US when it comes to DeFi. In the US, it's kind of hard because I think it clashes hard with the AML, KYC, KYT side, and do you the ability to interact with certain networks. That's the only way you can get certain coins. It's the only way you can get, like, if you're not hosting a node or being a part of the inflation part of a coin, they're not listed or anywhere. It does give you a mechanism to access, right? So I think from that being a functional thing, that's good. um I think it's one of those things, and what I've tried to communicate with, from law enforcement, we've helped talk at different events, from the Electronic Crimes Task Force to, I've talked to folks at FINRA, I've talked to people at Office of the Comptroller of the Currency, before, to try to help stratify, like, the different technology stacks that there are, from, like, these, what DeFi is, what layer two is, what
Yeah.
atomic swaps are, like mechanical things, right? And the things that they have, obviously the hardest heartburn on is like, well, how do I track through all this stuff? And I'm like, well, sometimes, like, you could go back and say, I want to listen to every phone call, I want to do all these things, I want to tap all these things, because you want to have control of it. But at the end of the day, one, there's privacy, and you got to enact privacy, because nobody'd want that back on them. um and then number two, it doesn't actually matter, because at some point, as long as everything's still um denominated in some uh internet, like, larger currency, as long as you don't have, like, the larger transactions that they're looking for, are going to intersect with some counterparty that's going to have some level of interaction with the world, like, where you're going to know that a large financial traction, or something has been, like, think of anything you buy, like anything large. Like, I always go back to the root of the, where do you think this is going to get spent on? They're buying cars, houses, planes, weapons of mass destruction, whatever. Like, there's going to be a transaction trail, and you're getting caught around the wheels on the mechanics of how we make a phone call, type of thing, right? I'm like, you got to think of these DeFi networks like a switching station for the telecos. Like, um the ability to proliferate and have more DeFi actually gets a positive, like, commerce and movement of, like, the 90%, 95%, and the 5% that you're trying to find, the government and the folks that are trying to enforce, sanctions and all this other stuff. The 5% of the world economy that's doing it, like, it's like one bad thing happens and we all have to take our
Yeah.
shoes off in the airport, right? So it's like, we got to get out of that kind of structure and think of it logistically better, to where you put those dollars and efforts. My counterpoint to them is like, go invest the billions of dollars you spend on enforcement, and invest a portion of those dollars in the DeFi ecosystem, and understand it and make it more strong, make it better. And then it ends up being a mechanism for transactions. And then at some point, through all the other things that we have to do when we register stuff and put tags on our cars and all this other stuff, the assets, the physical interaction with, after the money, is where that stuff should be, right? Not the money. Like, let it be free. And then you're putting your honey pots, essentially, at the asset side, or the physical transaction side, not the flow of the money. Like, it just creates more issues than it's worth. Because, even, like, let's say a DeFi network was trying to ever become compliant, which I don't think it could be, because by nature it's not designed to be. Um, you're still going to have some kind of exchange at some point. Um, if you're trying to buy something else, if you're just trading coins, who cares? I get it. The IRS will be looking at me going, no, we do care for every gain and loss and stuff like that. But I look back at them and say, we need to evolve. That's legacy rules
Yeah, exactly.
prior to internet and transactions. And they need to step back down and start to rethink of the fabric of what the rules are, and still like they'll get their money, but it just push it to the edges of the transaction set, right? Not in the middle of the transaction set. If people game and work their way up because they're a damn good trader or they built a bot or whatever, at some point they're going to go exercise that gain in something. And then at that moment, you can capture like, oh, you did really well here. What's the net first in, first out loss at the time of the transaction set, right? Because now you're exposing that to go buy something. So I think it's just rethinking, like a solution architect, kind of like rethinking the way things work and working with them to not um, suppress this, because the cat's out of the bag. It's going to continue to proliferate, and it's going to get better. It's going to get stronger. The security architecture is going to get stronger on it, where it's not going to it's going to be to where you can't stop it. It's a thing. So now, how do you interact with it? And it's kind of like the U.S. war on drugs. Eventually, now you can walk around anywhere here and see marijuana, right? It's like they kind of just was like, oh, this hasn't worked in 25 years. We probably should just like figure this out a different way. And I think that's going to be the way it is in decentralized finance. I think it's going to continue to build. It's going to get better. People are going to figure out some of the issues with the bridging. Um, and as the network stack gets more technology, and bandwidth and speed and compute, you will start to see, I think, a much more diverse, set of options in DeFi.
Yeah. Yeah, no, I think you made some really interesting points about the adoption thing. I think that's an ongoing battle, I believe, from what I've seen, and that's across a wide spectrum of regulators. I think they've all got slightly different attitudes, but collectively, I think they've got
For
one
sure.
goal in mind, which is to try and get a hold of things. Because look, at the end of the day, there's bad actors. And this is why I wanted to have
Mhm.
this chat about like the meme coin space and the DeFi space, because from where I stand, I see exploitations and bad actors play out almost every other week.
Oh yeah.
And I think according to
The
DeFi
incentive is
Llama,
there. The
it
incentive
is,
is there for
it
them to do it, and it's almost
is,
too easy. And it's not just person in their basement that's hyper smart. It is uh weaponized, right? So like if you look at like things like North Korea, they have the incentive because of sanctions to exploit these networks, and very focused, devout, software engineers that are kind of almost at the tip of the spear, like exceptional at what they do, because that's literally all they do. Um, and so when you're working with not just somebody that's financially individual doing it, you're looking at like a team that is being forced of like part of their life to do it, because there's sanctions on their country, which are very rightfully so on some aspects of like why there are sanctions. If somebody are going to threaten that they're going to blow you up, and that's probably going to cause some strife, but um and then are brutal dictators and type those kind of things. But like still, that being said, like that's a tactical focused team that is going to exploit it, right? So there's financial gain that can be done from there, and so you're always going to have that attack vector on any DeFi side, right? So that's why I was like, if some of those dollars are earmarked to fund development teams, versus them having to do raises to um, enhance that ecosystem. It's just a hard sell for some companies to do invest in those kind of things. They're like, well, what is our gain out of this? It's like, well, a stronger DeFi system gives you a trade, hub that then you can leverage yourself, and that because you at least had the line on the the master branch, you at least had some input to how it was going to work. That's where your R&D dollars are providing you a path forward and a confidence variable that you at least have your eye on the line. But getting more corporate investment into enhancing these decentralized systems, because they'll be able to use those decentralized systems at some point. Um, just from a transactional nature. Because I don't think you can ever, I don't think they'll ever be able to outlaw them everywhere. I mean, the U.S.
Yeah,
is very unique because um, it's essentially 50 states, 51 if you count Puerto Rico, um, and they all can make their own rules. I mean, there's federal rules, but there's states can forego certain things where they'll be like, yeah, cool story, bro, like
yeah,
not
sure.
happening, and then they'll just, I mean, like Colorado first on the marijuana side, right? They're like, yeah, we're not going to do that anymore, right? And then it's like, oh, well, it's federally illegal. You walk through Colorado, right inside of the front of the federal building, and there's people smoking marijuana, right? So
Or
it's
up
like,
in Delaware as well, right?
yeah, it's just like, so the states have, the way it's designed is the states could make the call on like, hey, we're not going to participate in this anymore. Now they risk all these large government, FINRA, and having like the insurance, when you talk, all the insurances on the banks and stuff, they risk part of that if they gave up certain, if they were like, we're going to YOLO into DeFi, they lose their bank charters to like have FDIC and all that kind of stuff. But like, it's going to take some first movers to do it. But I think the natural order is to free trade. And if you think about it, just think about it, to come up a stack on just the way trade works. It has been proven that free trade is a good thing. Like, you look at free port cities like Singapore, and what used to be Hong Kong used to be that way, prior to China taking it over fully. But it was British ruled, quote unquote, but it was a free port city, and it had expansive growth because of those reduction in rules, right?
Yeah.
Um, and I think if we think of DeFi in that way, that it is, if you freeport it and see what comes from it. And I think it allows you to create a new world of finance that may lean more towards that, and it gets them out of the big server rooms, right? On some of the financial transaction side, it gets it into this open ecosystem that now you don't have to carry the baseline. You maybe just, your budgetary dollars go to supporting the development efforts by multiple teams, and multiple implementations, right, that you could do in DeFi. um, and it's better money spent than them trying to architect their own kind of closed solution. um, I think that's where it goes. I think the evolution is going to be, the natural order is going to push it to be more open, because it's just, they'll see the advantages of it, and it's just going to take some time. There's a lot of AML, KYC, KYT stuff that we just got to figure out how that fabric works on that side.
Yeah, and I think it might have exacerbated the issue when we saw the arrest of that developer or developers that created that Tornado Cash ecosystem.
Yep.
And I don't know.
Yeah.
I
I
mean,
mean, I
from
think
my
he's still,
perspective,
yeah, I think he's still in prison, right? I
yeah,
haven't
he
heard
is. There's like
any
I
change.
think he's trying to raise some money together for the legal case, I think. And there certainly is a case, for those developers. Let's be honest, right? I mean, the whole point in DeFi realistically is to have your own, sovereignty over. I mean, it was basically, it's like a spin-off of Bitcoin, right? It's almost
Hmm.
like to have your own sovereignty and control of your own money. And I know that,
Hmm.
like, objectively, we could look at that and say, well, we're just using fiat, right? The normies will just be using fiat. That's what we
Yep.
see as sovereignty and having control and having a bank. But in the Web3 space, it's a completely different, consensus, and hence why I believe that their intentions weren't necessarily to facilitate any criminal or anonymity as far as
Mm.
transactions are concerned. I think they just wanted to maybe circumvent, um, the some of the impositions that the regulatory authorities were sanctioning, basically.
Yeah, it's a unfortunate set of circumstances when, if you can go in and have an opinion of like they want to be free range, right? Free, like you have folks in the west part of Wyoming that like live free or die kind of concept, and they'll that's okay. They can live off the land, whatever. But if you do that financially, you can be thrown in prison.
Mm.
Um, it's there's I think and we don't know all the full case
Uh,
against that individual, and the things that usually I would say from my experience in kind of that electronic crime side, I would say the only thing that might be out there is if there was some kind of interaction with, even if he didn't know that they were bad people, if somebody reached out on behalf of somebody and they helped facilitate a transaction. um this is kind of what happened with Charlie Shrim, when they were doing transactions for when he did some trading on behalf on his platform for a couple bad actors out of Greece. Um, it was kind of a victim of circumstance in some ways, mixed with if they had any spatial awareness that they were not good people and they were trying to figure out a way around it. It really hurts his case, like
yeah.
because and that would say that the fact that they arrested him and they did it so publicly, um like it makes me wonder if he indirectly interacted with somebody that he probably shouldn't have interacted with, and then knew that he shouldn't have interacted with them, and then still helped them use the platform. Then that created the end for them to go really after the platform, because there's other platforms like it that are still functional, and they definitely have a line on people that are probably developing it, but like they're not shutting them down, because it is
Yeah,
like
that's an
Monero
interesting
is still
point.
operational,
That's true.
so
Yeah.
I'd say the typically where you have any kind of interaction with there is that they have a case in some way. They haven't made it public, um, but I, it all comes back down to sometimes individual decisions. A person will make sometimes a bad call, right? And
Yeah.
hopefully that from his side, it was just a really bad call. It's the same guy that from Ethereum that went over to teach North Korea how to do stuff, and State Department said, "Don't do it, don't do it. Like you're breaking all these ITAR rules. Like if you do this, if you have a passport in the U.S. and you go over there," and he went over there, um, and it's like those sanctions and all that stuff's real stuff. I mean, it's um, I get the mindset of people that are free minded and like, I don't understand rules and I don't understand why we have to do this. We should be free to do this. And then you look at the bigger calculus that's involved of why certain people are in boxes like that, like North Korea and Iran and stuff like that, and that are not privileged to like any kind of information to understand like there's certain entities in there that are running that. Not all of them, like 95% of those people in those countries are probably perfectly fine, good people, but there is a 5% there that's running it, unfortunately, that have goals, and those goals don't include us. And it's we have the bigger stick right now, as it were. So it's like uh I think it's just it would go a long way to and this is on the regulators too, to really sit down with the community and understand the stack and maybe expose some of the risk publicly, to say, "Hey, here's the deal. We got this is intelligence. We need to declassify this and just like this is why this is bad, right? Like come change change the concept of doing a de-risking of some of that information to understand why, like this is why we don't want, nobody can have good things, right? Or nobody can play well with these countries, and then understand like that why not to interact with those people, going back to the Tornado Cash guy. And I don't know, we don't know, who knows if he actually interacted with these people or it was just a targeted hit on open source development for privacy enacted trade, right? But I think society in general has seen that any kind of direct attack on free will thinking
Yeah.
usually loses over time, man. Like it's just it's I think it's nature and human, right? So over time, the privacy war will be won on, people will figure it out that this is a better thing. And then we haven't even cracked into like enhanced artificial intelligence to help get us to that conclusion. But like eventually there's going to be some suggestiatory things I think that are going to come out of like AI that's going to be like, yeah, this needs to be super secure and stop being stupid. Go do this. And then, like, and then they'll probably even invent better ways for us to trade, privately with each other. But like, that threat hunting and all that kind of world, um, becoming really, really better, moving to zero trust technology, doing,
Yeah,
all those kind of things that are, I think will give a confidence variable for the regulator to where now you can just move back to doing free trade. And um yeah, I think on both sides we can't be on the side still going, those guys suck, and then they're like, well, we want to control everything. It needs to be like in the middle somewhere, right? So um I think us through just educating, I think all of us like doing this, helping educate folks with the conversation, talk about it's a key first step, and then really just kind of like through the stuff that you build and you do being like we're transparent about everything we do with like our builds and all that. uh, Developers being open source development, kind of showing the intention of what they're trying to do here, um, and then working with the folks that are running these countries, on figuring like what that median is, um, because like this is going to move forward. It's kind of one of those conversations, like I've had conversations before, IRSCI, which is the criminal investigation side of them. And it's like there's certain incentives in play. Like let's say I had a whole bunch of old Bitcoin and I'm holding it. The rules would state that I have to declare that. But I'm like, the incentive, if I don't plan spending it, there's zero incentive for me to ever tell you, ever. And only I know that. And there's nothing legally that I can be held against for not saying that right now. If I go and do it later on, I may pay a fine. I may even go to jail for a little bit. But if Bitcoin's $1 million a coin, it was worth it, right? So it was like one of those kind
yeah,
of things. Like we got to figure out the incentives in the structures in place to incentivize quote unquote behaviors. And like that's I think the core issue with a lot of those kind of things with like taxes and trade and all this stuff with it. Like there's a better way to do it, and fitting in the old rules isn't going to be working, with Web3 and just the proliferation of the privacy architecture that's going to be in play. So it's like, how do you interact with it? I've always said back to them and saying, be the better participant.
yeah,
Go out there and build, be part of it, provide dollars to this ecosystem to get developers to be able to help build, more robust security models with it, not have all these, bad actors coming in here and creating havoc, and then wrecking people that are trying to YOLO their whole life savings into it. And that would be a good steward approach than just enforcement, because
yeah,
all you're going to do is just drive it to the bottom.
yeah, yeah. I agree with that. I think raising awareness by having like so these conversations. I think there needs to be, and I'm not saying there isn't, but there does need to be a wider collective approach because I do
Hmm.
get the impression that there's like a demographic of individuals that share the same sentiment as us, both developers, miners, enthusiasts, and then you've got obviously the wider ecosystem that sort of still looks at things negatively, and still just I think it's a bit of blame culture. You're pointing the finger. You're responsible for that. Therefore, you can't have freedom to do this. And
Yeah.
I think eventually, if not already, we will have this like stalemate position where you've got the two sort of trying to pull at each other or pull away from
Mm.
each other, and it's like no, you need to be a cohesive unit really. And I think from my perspective as a dev and as an auditor, I mean there's a lot that we need to do in the Web3 space, and I think when I speak of Web3 now, you have to sort of incorporate Bitcoin into that, even though it's technically not. Like you said
Yeah.
earlier, if Bitcoin plummets, so does Web3. So it's part of the wider conversation, in my opinion. And you mentioned actually about I want to talk about AI briefly before we close.
Yep.
Um, I'm not like I know a little bit about its impact on mining, but I'm not too sure on how it's doing so. Maybe you've got an idea of how it does it. Have they started to build like ASICs with AI integrations or
Mm.
GPUs or anything like that?
No, no, a lot of the stuff that if you see any kind of articles or anything about the interaction on the AI side, it really comes down to the folks that are positioning themselves, especially like let's take for instance HUD 8. HUD 8, publicly traded company, in 2 years ago was seeing the end of Ethereum mining, right? They were
Mm,
looking at it like, okay, we have a lot of GPUs. They were mining Ethereum with GPUs too. When they went to update their stack and the risk with Ethereum moving to proof of stake, and that was the majority of the mining revenue when it came to GPU mining. They spent a little more, and the GPUs from NVIDIA that they used were could also pivot over to doing cloud hosting and computational work from like a data center standpoint, which included artificial intelligence. So like LLMs could run on their equipment. So it's not that the mining activity for like Bitcoin or any of that is uh, leveraging the artificial intelligence. It's the fact that the data centers and the power that's coming into those facilities can position a portion of their mining power over to compute for those particular things. So they'll go out and acquire essentially, for you racks of NVIDIA A100s with, a data. It's essentially they become micro data centers. So instead of running ASICs and running mining Bitcoin, they're allocating a portion of their farm because they have an expansive amount of power there with a cheap electric rate that they can compete in the data center world. So they're they're essentially bringing micro data centers up to sell compute to smaller shops that just want to run their own LLM, which is like a large language model, like ChatGPT as an example. You could run your own versions of. There's a huge swath of different models that you can run on this hardware and give you different results. Some people are doing it for engineering reasons. Some of them are using like a chat GPT where it's just like a word matching, try to bring contextual text to you. Some are for image development, some are for video development, all these different facets of enhanced uh, activities when it comes to artificial intelligence can now there's way more demand than there's compute. So a lot of these miners are finding opportunities, for these data centers where they're like, oh, we're if 2 years out to build a data center start to finish, but there's this building here that has 20 megawatts in it. Can we use 5 megawatts and put like an Amazon snowball there, which is like a 20-foot container filled with racks of servers? And that's where you're seeing a lot of these headlines where it's like Bitcoin mining and artificial intelligence. It's it's becoming a new kind of mecca for a quick data center because a lot of these larger farms especially have huge network trunks too. Like the one we just put out in North Carolina has a 1.25 gig up and down fiber line, but we can upgrade it. The pipeline that's there, we could literally bring in 100 terabyte or 100 gigabit line right now, and like they could expand that to a much larger connection, or we'd be running 400 gigabit. um, and then with that kind of bandwidth mixed with the 15 megawatts of power we have there, we could put a small data center module there, a mobile version of that kind of edge that's already all the computes in it. It's got the AVHC built into it. I don't have to do much more than just get it on the property,
yeah,
set it on the property, and then run. We have 17 transformers there already on the property, all 1000 kVA. We could swap one of those out for a 3500, which is 3.5 megawatt, and then light that box up, right? And literally turnkey in a matter of a month to do that, right? Because we already have all the power there. We already have the facility with the building, make a call and get our fiber upgraded. And then overnight we have a data center.
yeah, yeah.
Because you don't have to go build the brick and mortar and all the things with the data center. You could just do these micro ones. So that's kind of the play right now, because the infrastructure is in place for the artificial intelligence.
Interesting. Yeah, because I talk quite a bit on the channel about AI and blockchain and its integrations thereof. So it's interesting to
Mhm.
see because I'm not really privy to what's happening on the the mining side, although I'm seeing the headlines like you've highlighted.
Yeah, yeah.
I
Yeah,
know
it gets
that
confusing
there's,
thinking the AI is helping it,
yeah,
but it's
yeah,
not it's not. I mean, there's
buzzwords,
not
right? I
even
guess.
yeah, yeah. It's a bit before that. I mean, and just looking at the at the end of the day, SHA-256 and doing the proof of work is still work. The
Yeah,
artificial intelligence really wouldn't I mean, it would be more trying to target like an engineering LLM to figure out could you build a better chip more than could you
yeah,
solve
exactly.
SHA-256 faster. You'd actually use way more compute because if you think about it, like one Bitmain newer machine, let's call it S19K Pro, 120, 120 terabyte or terahash, and if you think about that just for a second, that's 120 like 64 character alphanumerics, 120 trillion per second. Like
Yeah,
it's incomprehensible of how many processes are running in that in 1 second. So if you were to try to abstract that to have an AI support that, like it's the interleave is going to be like the ASIC chip is doing all the work, right? The AI would be this whole sub process that would spend time, and you'd probably get maybe a couple gigahash out of it, and you wouldn't get you know trillions of hashes per second. So more you could use AI for maybe the management side of um, there's essentially most of the like what we build, part of what we do as a company is go in there and take like awesome miner or foreman as an example, and we'll write a lot of custom scripts in C sharp, and it's essentially a decision tree. So it's helping like recover a miner that's went down. Like, is there 3 fans running? Okay, cool. Like, turn off one of the fans, restart the miner. Like, it's more of predictive maintenance
yeah,
aspects than it would be anything else. But right now, that's a decision tree, and it's not very deep. So it's like wouldn't need an AI to figure that out. It's more of like just a series of actions. But like, yeah, I think over time, maybe a larger fleet management, it could be maybe leveraged to do that. But like, most of this is all a hardware play when you see the headlines and of a micro data center going in place of where the Bitcoin mine is.
yeah. That's interesting. Just conscious that we might be running over both of our times, and we're probably very
Yeah, and I
busy.
got a hard stop in a few minutes here. So yeah, we're
All right, nice. No, I appreciate it. Thanks for jumping on today, Carlo. It's been
for sure.
great to have you on. I had a bunch of other things that I wanted to talk about, but I'll be honest with you, we probably
We'll
could
do
have
another
gone
version.
on. Yeah, we can do. We'll do another one, no problem.
See how the
Um,
people like it. Make sure they're
yeah,
commenting on it.
yeah, definitely. Yeah, I mean, on that note, guys, obviously, if you've enjoyed today, then don't forget to like and subscribe and leave your comments below. And I'll leave a link in the description so you can check out Carter's YouTube channel. It's Bitsby Tripping, lots of really cool stuff on there for you to learn about mining and everything like that. And yeah, I'll see you guys in the next video.